All right, all right. It's a beautiful day, and all right, all right. Um, I know I was supposed to start this live at 11 a.m. Pacific Standard Time, but in the markets, events move very fast. So what I'm gonna be talking about is basically talking about what's going on in the stock markets, and currently the U.S. stock markets is open. And basically, I'm going to give you a macro overview of really what's going on and what I think and how I think these events are going to affect the markets. Looking at commodities such as Brent, crude, gold, and the US stocks, and the background to the story and some of the probable trades that I am likely to take. But again, always remember that investing comes with risks, and make sure that you don't take anything that I say as investment advice. These are just my views, and if you have any questions, make sure you share those questions on the comment section. So let's start with what's really going on, because what happened was very unprecedented in my view. And I think for me, I wasn't really expecting that there was going to be the large scale operations, Iran, US, Israel, and the impacts are already visible right now. But what has been happening is, let's see, at some point I'm going to share, just to share with you what's going on in real time in terms of technical analysis on the market using the software that I use to analyze. But what is very interesting about this particular event is that when the US and Israel launched the large scale strikes on Iran, including the attacks that killed the Iran's supreme leader, they also hit energy infrastructure, and that has resulted in some escalations in the regions. But the thing that I find very troubling, at least as an economist, is that the stress, the shipping that goes through the Strait of Hormuz, which is more like the choke point for roughly 20 to 25% of the global crude and LNG, flows through that. So what this means is that it's going to be heavily interrupted. And what has been happening is that major lines such as Maersk, I think this one is a Dutch company. They've already, indicated that they are rerouting or halting the transits. And also, even what this means is that probably potentially the cost of doing business is going to be high because the insurance premiums are going to be higher. So this is something that will have an impact, right, directly on the stock market. For example, Brent crude has spiked by to around $80, and I'm going to show you the current prices of those commodities. Brent crude, right? To about $80 US dollars a barrel, up roughly 10 to 13%, in a matter of days. And some analysts are predicting that it might probably go to 100 US dollar, right? It's on the table. But the thing is, crude is one such commodity that affects everyone. Right now, if you go um, on the gas pump, fortunately in Canada we have our own gas in Alberta, and most of the domestic production that we have is meant for our own consumption. So at least for the Canadian economy, I think probably that will be an advantage, because if the prices of crude and oil goes up, that means there will be more revenue for Alberta and Canada overall. But other countries that don't have this, it's more likely going to affect this. I was talking to a friend who is apparently based in the UK, and what he was telling me that today he was actually surprised to see that the gas price in the UK was up 20 cents, right, per gallon. So that's the real impact of war. I'm not an expert, in Middle East, but what I observe is that geopolitics does affect, the way of life. But I'm just talking from a point of someone who is interested in investing in the stock market. Now, if this conflict widens and the straits remain closed, this might actually cause, the prices of, crude, and here in the West, like in North America, West Texas crude oil, that's the benchmark that we use. It's most likely going to go up. Gold, obviously, people want to save it. If things like this, it means more risk, more uncertainty. Some people will jump into gold to go even above $5,000 per ounce. And this is something that we have seen in the past, to say when there's a lot of risk, a lot of volatility on the market, some people they sell stocks. That means they move out of equities, some equities. But I will say that though, from the US stocks that I follow, what is interesting is that there are some companies that are really doing well. If you look at stocks such as Palantir, defense stocks, right? And I will show you on the chart in a second. They've been going up. Pretty much the US market has been going, up, most of the stocks. But there are some stocks that will definitely be hit hard. If you look at companies that are involved in the travels, like for example, if what's happening in the UAE and other, parts in the Middle East, you are looking at Bahrain, Kuwait, Qatar, those countries that are actually, seeing those the retaliations, it means tourism, right? It's going to be a challenge there. So there are companies, for example, that are involved in tourists, airlines. Those ones will also be hit. But I was also thinking about something that I thought was really unprecedented. The fact that the UAE is also being attacked in this case by the Iranians, yeah, in retaliation of what Israel and the US, the attacks, right? It means because people were going to the UAE, it was a safe haven. If you wanted property, if you wanted to go on vacation, I've been to the UAE once. Actually, I went to Abu Dhabi, which is not like which was very interesting. So a lot of nomads, people were just buying properties there, going there. But the perception that there might be attacks of this magnitude, I think that's something that's going to shake the real estate market and even the economy. And what I also consider to be very significant in this is that whatever happened, people are going to have this at the back of their mind. Imagine the Burj Khalifa was almost like there were missiles that were aimed at that. From what I saw, I haven't verified that, but I just saw it on X. And right close by, there was a hotel that actually was hit by a missile. So these are things that are really, really, really happening, and they will have an impact. But again, what I've seen is that, as someone who is interested in analyzing these things, some people might take these opportunities. Again, what this means is some people might panic sell real estate and all this, but for some people, this might be an opportunity of a lifetime. Because, and I'm not saying this is investment advice, but if I had money, I think I would ascertain that, because the UAE, they have lower taxes. It was very stable. I don't know if things have really changed, or things will change. But usually when things like this happen, a lot of people, they panic. Think of it, people who are in real estate or about to close deals, the property prices might drop. And when that happens, well, people who have money and we have a longer time horizon, they might get these properties or these assets for a much cheaper price. And that's how sometimes people make money, right? So I think that's another thing that I think is interesting. And what is happening here is that there's more uncertainty in the Middle East. But so far, like I said, defense stocks, oil and gas producers, and some commodity linked names are the main beneficiaries of this, while airlines and travel and shipping exports companies are under pressure. And I will show you on the trading view chart, so that we can have a more in-depth analysis of what's really going on. Now, the US stock market, most of the stocks actually are up. We're up, at least because the situation is changing. I saw President Trump was speaking on Bloomberg TV there. But what I noticed is that there are several key factors. It seems like most of the US stocks were up. So this conflict, it has serious consequences. But for now, it seems to be regional. And in the US, of course, the US is far away from Iran and the Middle East. In that case, there's an ocean that separates us from the Middle East. But over time, I think if this conflict prolongs, we are going to see major impacts, like I was talking about energy and stuff that I was talking about. But some people, they don't know that the US, it is an energy cushion. The US is far less dependent on the Gulf for oil than Europe and parts of Asia. So probably what this means is that the gas prices in Europe, in the Gulf, it's mostly those countries that are going to be affected in a very big way. The US, they have their own oil. We also have oil here in Canada. So that's something that I think is actually interesting, in the sense that the American or Canadian consumers and corporates, they may be insulated from the first round impact of higher crude prices. But if this conflict prolongs, then we might see more prices going up, because inflation is inbuilt. If you look at energy prices and how it impacts sorry, the prices, if you're to go on the grocery store to buy stuff, it's in one way or the other, inflation, it prices in energy cost. So there was already this geopolitical fatigue over the past few years. Markets have digested multiple flares up. You remember there was, I think, the 10-day or Israel-Iran war, and it came, and then fortunately it came to an end. But there has been Ukraine prior to the Iran incidents and Red Sea disruptions. All these, they have impact on the market, right? But the thing is, I haven't seen a bear market as yet. So I think for investors, this is something that means people are buying, right? If the market is not going down, it means if it's going up, it means there are more buyers, right, than sellers. That's how the market moves. So that's something that is interesting. Now, let's look at another scenario. In the US, the past 3 years, there has been a bull market, right? If you look at the past 3 years, the US stock market, if you look at the S&P, it has been returning more than 20%, except last year, I think it returned 17.6%. Roughly there, don't quote me. I'm just, the last time that I checked, I think it was 17.6%, which is not really bad, right? So is this bull run in the US going to continue in 2026? Nobody really knows. You can't really predict the market. Can you imagine on Friday when the market closed, this conflict was not there, right? But we woke up on Saturday, there was something that was going on in the Middle East. And as you can see, this is a very highly fluid situation. But let's assume the bull run continues, right? It's historically and statistically, usually after 4 or 5 years, there has been a bear market. But again, when I'm investing, in my case, I am looking at the long term. So the best way, and this is not investment advice, the best way that I do for myself is like I just buy and dollar cost average, ETFs, index funds. Like today, I just bought a few shares of Berkshire Hathaway. And the thing is, they had earnings, missed earnings, but I still think Berkshire Hathaway, and that is the company that was actually managed by Warren Buffett. And I think now the CEO is Greg Abel, and they reported their earnings on Saturday. And unfortunately, that's where when the escalation in the Middle East happened. But usually, Berkshire Hathaway, because they have a lot of cash, they are well diversified, and the different business units across different sectors, the stock is very stable, right? And for me, what I want to do is I want, number one, to reduce the potential of permanent loss of my capital. Let's say if I invest 10,000 or $50,000, if you are investing in the stock market in stocks, there is a real chance that you can potentially lose all or part of that. So one thing that I like to do is I like to invest but manage risk in a manner that I don't lose my capital. But at the same time, I want to have some growth. So if you look at Berkshire Hathaway, for example, and this is not investment advice to say you should buy it, this is just my perspective. It has been, going up. If you look at from 1965 on average, like 20%. That was the record that Warren Buffett, uh, had, and he left. And I was reading the post by this very popular professor, psychology, Adam Grant, and he was actually saying even if Berkshire Hathaway stock was to crash by 90% or 99%, right, it was still going to beat the S&P 500 return in overall. So this is different. Of course, it's under different management. But the thing is, it tells you that if you want to be rich, even if you don't have much income, if you invest in good businesses over time and you compound and time is on your side, eventually you are going to be rich, right? So that's the thing. So it's very, very important to invest in companies that have, a good track record and that are very stable. So I think for me, what I'm going to be doing, I'm going to continue buying exchange traded funds with exposure to the US and the world market. There's another ETF that I like, VT by Vanguard, and also even, Berkshire Hathaway, like I said. And I will consider maybe QQQ and SPY. But the thing is, for the ETFs, I'm looking at the longer term. So whether there is a bull case or there's a bear market, I'm just going to be dollar cost averaging over time. That's the thing. I'm not going to try and predict and lie or think to myself that I can predict the market, confidently that it's going to go up or down. I don't know. But historically, what I've seen is that S&P 500 has been going up. If you look at Berkshire Hathaway as an example, it has been going up. But indeed, there have been companies that have actually, like ceased to exist. In other words, if you invested in them, probably you would have lost all the money. Now, what the market usually does, from my experience, is that market makers, they usually try to balance short-term risk. If you look at the oil shock that is happening right now, headline volatility, but still, again, there are some macro factors. Earnings. Most of the companies in the tech stocks, they have been doing really well in terms of the earnings. If you look at the big tech firms like Amazon, Google, if you look at NVIDIA, they just reported earnings. They've been beating earnings. I think that's something that is very interesting, So if inflation, unemployment on those situations, they remain stable, I think that's something that's going to probably propel a bull case. In other words, the market to continue going up. But whether it's going to continue going up or down, nobody really knows. My strategy is I like to dollar cost average Whether I buy one share, if I have extra income, I'm just going to continue doing that. Only in things that I understand, right? So, guys, make sure you subscribe and you follow me for more. I know like a lot of people, they just watch some of my videos, and it would really mean a lot if you guys can follow me, because I noticed that it's far much better for me to do live stream and share some of the things that I'm learning in the market in real time than doing pre-recorded videos, because most of the time the events, they change very fast. So another thing that I'm going to talk about here is that the interest rate expectations, it usually affects the prices of stocks. If you are looking at what the Fed officials, have been saying about the next move, if they are going to cut interest rates, I think most of the studies of the remarks that I've seen, and usually I like to pay attention to the Chicago Mercantile Exchange, the CME Fed, the CME 2. Usually it tells you it has been right most of the time. It tells you what they think about, the probability of the Fed cutting the rates. And when the Fed cuts the rates, basically Federal Open Market Committee, you have directors from different states in the US who decide on the interest rate, whether to keep them where they are, to reduce or to increase. But obviously, if they increase the interest rate and also they control the balance sheet of the Fed to mop out excess liquidity, in similar terms, basically they influence the monetary policy. So if they reduce the interest rates, usually it's the benchmark, so it means the cost of capital is going to be lower. So it means if you want to do car loans, if you want to get into a mortgage, then the interest rate will likely be lower. So that's something that is actually interesting. That might happen. Now, I say that because if the Fed cuts interest rates twice this year, it means money is going to be cheaper, right? But again, there's also the risk of inflation. So they have to strike a balance or perhaps delay the cuts and weigh on the rate sensitive stocks. But usually, when interest rates are reduced, you see that most growth stocks, they will actually go up. So you are looking at most tech stocks. So if that scenario plays out, it means if you have exposure to those tech stocks, that might be a good thing. Again, there's always the risk, right? That is, it will happen or it may not happen. Now, there's also another factor that I have been monitoring, the risk sentiment and positioning. This is very important because each time that I am investing, I like to manage risk. If this conflict in the Middle East, Israel and US, Iran conflict, right? If it widens or casualties and disruptions escalate, we could see a broader risk of episode where equities, high yield credit, and cyclical sectors sell off while gold and dollar may rally further. So what this basically means is that, some sectors might actually, we may see some sector rotations, and this happens all the time, right? People are always constantly evaluating risk, but there are sectors that are resilient. If you are looking at retail, like if you are looking at companies like I follow Walmart, Costco, people still are gonna need to eat. So those companies probably they might be resilient. Again, the key thing that I am also learning in investing and trading is that you have to understand valuation. It doesn't make sense to just buy at the top, right? Just because you think this sector is going to benefit or this stock is going to go up. Patience is very important. So it's very important to understand uh, those valuations. But for now, what I can see is that markets are in a wait and see mode. Oil is up, gold is up, as I will show you on the chart. But sector rotations under the surface is kind of like happening, but no full-scale liquidation. I was expecting that probably today there was going to be a chance that there was going to be a wider sell-off. It didn't happen, right? So that's why it's difficult to predict the market, because there are so many variables, especially when you are looking at the kinds of geopolitical events that can reverse very quickly. If there is a diplomatic pause, probably markets might even go up higher or worsen if this conflict continues. So, what I've seen so far is that higher oil and fuel prices, mostly in Asia and the Gulf regions where this is happening, but in the US and Canada, it's it's not yet the full impact of the oil. It's not yet. It usually takes time. There's transitory, even when the Fed increases interest rates or changes. Usually, economists they say it takes maybe up to 18 months to have the full impact of that decision to be fully felt. So that's something to have in mind, to say, which sector you are, whichever sector that you are investing in, just be aware that things can change quickly, right? Like I said, pressure is on the airlines, shipping, and travel. But again, sometimes opportunities are actually right in front of us, because once there is a sell off in a sector, it means sometimes if you really understand these things, that's probably a good time to get it. For me, I'm going to be honest with you guys. I don't like to invest or even trade airline stocks. I don't. I like to stay away from those. Shipping, I have a few that I follow. Travel, I like Booking, right? Stocks like Booking, I follow it. But with what is happening right now, there might be opportunities. Bookings, they reported their earnings, I think that was last week, and they did beat earnings. It still went down by over 7%, even though it recovered post earnings. So if I am buying to hold for the long term, you know, there's nothing really bad. But again, this is not investment advice. I'm not saying you should buy that. You should always do something that you are comfortable with. So the key thing is, I like to focus on fundamentals, risk management over trying to trade every headline. That is very key for me. And I like to have diversified exposure, limited position sizes in volatile markets like this. Like I mentioned, I like Berkshire Hathaway and total market ETF like VT. But right now I saw that VT is overextended, is at the top. So I just want to be aware that when I'm buying, I want to buy when something is oversold. And when it's overbought, that's when I like to usually sell. Now, what is important, I think, at the end of the day, is you have to make sure you do what you are comfortable with. So let me jump off to the charts so that I can do some analysis here. Let me know if you guys, make sure you comment or you like. If you have any questions, let me know. I hope you guys, you are seeing the chart here. So from the chart, let me see here my volume. How is my volume here? So from the, yeah, okay. So I can see that the chart is good here. Okay. So from the chart, I think the first thing that you guys can see here, these are stocks that I follow. You can see that most of the stocks are actually up. But the first thing is, I think the easier way to look at it is to just go into and check out the S&P 500, right? I like to just look at SPY. And when I go on SPY, I see it 0.3% down, which is not really, bad. Even if you look at, actually, apparently the Nasdaq QQQ ETF is actually up 0.6%. So basically, the US market shrugged off. If you look at most stocks, tech stocks like Microsoft, it's up. Apple, it's up. NVIDIA, it's, you know, they are up, right? But Berkshire Hathaway, they did report earnings, and they indicated that their operating profit fell by 30% to 10.2 billion, mainly due to 1.56 billion non-cash goodwill impairment affecting 4 subsidiaries. So there was something that was very significant that they reported. But again, I would be concerned if they miss 4 earnings, right? But what I wanted to jump on to was the fact that you see defense stocks. I follow a few defense stocks here. This one, RTX Corporation. Is it? Yeah, this one. It's up. Palantir, I saw it was up as well. So most of the stocks that are related in that sector, they are really up. But what you can see here is overstretched here, right? And when things like this happen, if I wanted to buy a stock, I would rather wait for it to be oversold, like right here. So this would not be the good time to be buying this stock. But you see, Goldman and Sachs, these big banks, they are still today, they are up, right? If you look at Morgan and Stanley, it's up. So unless this war prolongs, and guys, I don't like wars, but again, I don't have power to stop it, right? But if you look at silver is down 5%, but you will notice that gold is actually up a little bit, 0.61%. And GOD, the ETF that I track that follows gold ETF, it's also like up. But the US dollar actually firmed. You see, DXY is the US dollar relative to the a basket of other currencies. So you can see that the US is firming against other currencies, right? This the DXY, the US dollar index. This is quite interesting, like I mentioned, and you will see that, you know, the West Texas Intermediate crude oil, it's actually up. That's something that was predictable, right? Because of what's really happening in the Middle East. So if you look at it, it's up. It has retraced a little bit, but if you see here, it went up a little bit. It went up, I think it had a swing of about 5.4% from this, but now it's kind of like retracing, right? So again, when I'm investing, I don't want to be looking at just the short term. I want to be looking at the long term. You see, now this, it went up, now it's coming back down. So it went close to that supply zone. You can see here that was almost a 5% up, but now it is down, right? You can see, I think this is 5%, right? Yeah. So, but you can see that this is overstretched. This is overstretched. But if this, which I don't know, if this continues, we might probably see, like I said, this to continue going up. But again, let me see here. Let me look at the longer time horizon. If I look at 5 years, this was in 2022. It shot to almost 130 per barrel. So yeah, I think the highest, this is almost for West Texas Intermediate crude. Yeah, it actually went to this level. So it's possible that there are some people who bought some oil stocks, or who had like CFDs futures at that level, and it really went down. But you know, that's something that happens, right? You can either win or lose. That's how it works in trading. But trading and investing, they are different, right? So I think overall, the most important thing is to manage risk in this particular situation. Because if you don't manage risk, there's a very good chance that you can potentially lose some or all of your money. And you don't want that. You want to be winning, right? So that's something that is interesting. Now, let's see if there are any questions. Do you guys have any questions that you want to ask? You can send them. I will be able to see the questions here. I see there are a few people who are liking this, but there are no questions. Again, let's see if there are some questions and answers here. I can. Oh, another thing that I wanted to share with you guys is that sometimes I think it's very common that sometimes I used to think that I can predict the market, right? It's very difficult. So once I started not trying to predict the market and controlling risk, focusing on the fundamentals, yeah, my results for my portfolio increased quite significantly. And a lot of people, they also panic. So there's also the need to manage some emotions, because just imagine, probably, I was talking to a friend and I was like, oh, if the market is down, right? A lot of people, they panic. They panic only for the market to go up. So as long as I am holding fundamentally strong businesses at a good price, and I have a long-term time horizon, and I have good businesses that I'm holding shares for, I would not be scared, right? So that's the thing. So when I'm looking at stocks, I'm looking at stocks that have fundamentals that are very strong. So it's something that I can share with you guys to just say, look, if you really want to make money in the market, yeah, make sure you understand the businesses that you are buying shares for, and don't just jump into things that you don't understand. And another interesting thing that I've observed also in the market is that usually Bitcoin is an indicator, right? That I usually look for. Just a moment. Okay, so usually I notice that when, let me look at Bitcoin here. When Bitcoin is up over the weekend, it sort of signals how the market is going to respond. If it's down, this is just my observation. So let me see Bitcoin US dollar. Let me see. Is this the one here? Okay. Okay, this is Bitcoin. I think I don't follow crypto. I'm not a big fan of crypto, but not to say, but you can see that crypto is up today. And most people who were of the view that Bitcoin usually it was supposed to act more like as a hedge. If the equities market drops, people would go to Bitcoin, but it's not replacing gold as it were. So, but what happens is that, you see, usually when it's up, it kind of like signals in my experience. When I see Bitcoin is up, I kind of like, okay, probably the market is going to go up. So I thought that's something that's interesting as well. But at the end of the day, you must manage your risk, because if you don't manage risk, you are likely going to lose a lot. So this is the ETF that I was talking about. And if you look at it, it's apparently Vanguard Total World Stock Index. It was, if you compare with SPY S&P 500 ETF, ETF that tracks the S&P 500, the returns are not spectacular, but this one is more like exposure, more global exposure. Because if you look at the holdings, it has many holdings, right? But the top holdings are the usual suspects, the big tech firms, which are actually up. But if you look at it at the end of the day, there are many holdings here, right? And this has been, it has a dividend yield of 1.74. Again, this is not investment advice. It's me just looking at, how I can diversify my portfolio. So if I'm looking at the long term, one thing that I would like to do is to just buy and hold, buy and hold. So, but at least have some exposure to the world markets, other than just being concentrated 100% in the US. So this is what is happening. So the other stock that I have been following is called Celestica. It's at the center of the data center. It was too skisted to it, went down, but apparently, like the market has recovered, and you see that most stocks they've also recovered. So at some point it went to 262. Now it's up a little bit from where it was. Not a little bit actually. It's up from where it was, but you can see it's very volatile. It's a high beta stock. Like I think the beta is like 1.4. I think the last time that I checked. So it means it moves much more aggressively, right? Up and down. So I thought that's something that is very interesting, because if your portfolio is a high beta stocks, then you should have a thick skin. You really have to be careful, because if it is high beta stocks, it means if the equities market drops by even a small percentage, most likely those stocks are more likely to move much more than the market. So you can see your portfolio swinging up and down by a big margin. So you should have a thick skin. But apparently that's not how I trade. I like to manage risk. I like to do the slow and boring things. And over time, make money in the process, because I realized that if you want to make money very fast, usually you end up losing it. So now I was asking if any of you guys actually have any questions. I don't see any questions on the chat box. And let's see if there are any questions that I missed here. There are no questions. Again, at the end of the day, guys, whatever I share here, I'm just sharing my experience, right? So make sure you do your own research, and it's always the right thing if you have your money on the line. Just make sure you have your own due diligence. Okay, for the people who are watching on Facebook, thank you guys for tuning in. On YouTube, more people are watching from my X account. It so seems like that has been the case when I did the live stream yesterday. But thank you so much, guys. You make sure you follow me, and if you have things that you want me to address, in particular with regards to the US and Canadian stock markets, let me know on the comments below, and I will address those things when I do the next live stream. The next one should be on, depending on how events move. I mean, the good thing about live stream, I can just do it, right? But regularly on Saturdays, I want to do that, because I am committed to doing at least one video every Saturday, time permitting. So, okay, I wanted to show something here. Okay, so you see companies like I was indicating in the Royal Caribbean, like in the travel sector, most of them, at least those that I follow, they dropped it today because with what is happening, if this conflict continues, then that's something that might be something to be careful about. Again, Royal Caribbean is a very interesting stock. There was a point when, let's look at 5 years ago. Just look at these guys. So if you invested in Royal Caribbean stock, it was a $35 stock in 2022, right? Let alone when there was the COVID pandemic, I think that was right here, right? It went down to almost $21. Look at it now. This is, yeah, couple of years later. So if you look at from $35 stock, yeah, so this is how it is gapped up. But again, it doesn't go up in a straight line. And when I'm investing in stocks, the bottom line is I like to go to the fundamentals. Let me show you guys something here. Let's see here. Okay, let me show you guys something here. I hope you can see this. Okay, so this is the website that I like to do. It's free. I don't pay for this, but let me just go back to the. Okay, so if you look at this, the first thing that I like to do is I like to invest in businesses that are profitable. So their net income, recently, the 4.27 billion. This is good. It went up by 48.3%. So this is a profitable business. Okay, interesting. Earnings per share. For me, I like to look at the forward PE, right? 16.64. So it's cheap. It's not really like, yeah, it's cheap. And then they pay the over $6, 1.99%, almost 2% dividend, right? So what this means is if you have shares, you can get paid dividends. And if you look at the 52-week range, it went as high as 366, and it 1 year ago it was the lowest point it went was 164. And it is volume, it is liquid. So these are the things, the basic things that I do before I do a deep analysis. Now, when I go to the financials, I'm mostly interested in the cash and cash equivalents, right? So for me, I'm interested in the trend, right? So cash and cash equivalents, it means they have 826 million, right? That they have cash right now, right? That was as of if you look at that one December, so they had 826 billion. So this is not a business that's probably just going to go bankrupt. So this is a good thing. Then I go to I like to go to long-term debt. I want to see the trend, right? So I come down here, I'm looking for this is total debt. I just want to see long-term debt. So I like to see the trend. It's been kind of like going down, but 18 billion, they have almost a billion in cash. But if you then look at the total assets, total debt, it's like 22 billion, right? But for me, I just like to look at the long-term debt, the trend, 18 billion, they have 26 million in cash. Now, do they have the ability to be to able to pay it over time? So I look at the free cash flows, right? So they are generating after removing all other expenses, right? The cash flow is positive, right? They have 1.26 billion that they are generating, that they generated. If you look at the most recent quarter, so they generated after everything free cash flows. This is money that they can use to pay off debts and stuff like that. So right away, it tells me something. This is a company, one of those companies, it passes the first, stiff test for me to say, look, this company is at least it has some, solid fundamentals. Again, but analysts they use different methods. But for me, I kind of like just look at what they are thinking. But Warren Buffett usually is to laugh at these guys to say, look, these guys they are paid to do this forecasting. Stock price is very difficult to predict, honestly, because that's why they upgrade and downgrade. They are revising, constantly revising. But I think for me, the focus is like the things that I mentioned. Does this business has free cash flows that are growing? Do they have cash? Are they profitable? If they are profitable, is the profitability increasing or decreasing over time? I want at least 5 years. So those are the basic things that I look at, right? Now, another important thing is to look at what they do and then kind of like use macroeconomics to kind of like, weave in my understanding of how things move to say, what does this business do? How likely is it going to be affected by inflation, things that are happening, right? But this one, it operates cruises under the Royal Caribbean International and Celebrity, right? I actually have a relative who works for this. She tells me it's nice. When we did the cruise ship, we actually went to it's what MSC, right? I think that's the Italian version, the Italian one, and it was honestly good because what I learned from that whole ecosystem is that there's internet. They sell internet. They sell packages. Like if you want to travel around, like whenever they are going to places, getting a notification that your browser has lost connection to your screen share audio. Try sharing the. Okay, let me try to share this again. Okay, let's see. Okay, so this is something that I found interesting. So I'm looking at all those other income streams, potential income streams like internet. They are selling internet. I'm talking about the cruise ship, and they have tickets for people who actually want. You have to buy the ticket to be in the cruise ship and all this. So is this a business that I can easily understand? So this is what I do when I'm investing in a business, right? A publicly listed company. I want to understand what this business does, and I get into detail. So this is just the basics. And I also, look at, other reports, you know, like you see the 8K form, but now with AI, you can just summarize this, right? And see, understand about its competition, how is the competition going? Just analyze, basically what's happening in this business, the risks and all these things. So these are the things that I look at. If you look at Amazon, for example, it's the same strategy. You look at that, right? It's these are the same things that I look at, right? But the key thing when I'm looking at forward PE price earnings, basically you're looking at how much investors are willing to pay for. Because when I'm buying shares in a business today, I'm buying it because I would be confident that it's going to go up if I'm going long, right? So if I'm confident that it's going to go up. I will be happy to buy, right? So usually companies with lower price to earnings ratio, depending on the sector, I like to compare it with the peers. They are considered to be cheap, right? But another interesting thing is the beta here. You see, for Amazon is 1.39. It moves like 39% more than the market. Basically, if you look at the S&P, so it's very volatile, right? It can go up much more, up or down, than the S&P 500, the broader market. And I'm just giving you as an example. So I do the same thing, right? I look at, obviously Amazon is very profitable, but if I look at the cash and cash equivalent, can you imagine 123 billion? They have 123 billion on their balance sheet, right? And long-term debt. So these guys, they have money, real money, right? If I look at, so if I look at the long-term debt, 73.4 48 billion. These are billions, it's a lot. So they can literally pay off their long-term debt, cash, like pay it off and still, remain with some money. And if you look at the free cash flow, the money that they are generating after expenses and stuff, you're looking at 7.695 billion. So they are generating enough money, way more money, to pay off their debts. So these are the kind of companies that I want to invest in at the right price. It's not just at any price, because at some prices the stocks, they might be overvalued. So it's very important that you understand that when you are buying stocks. Okay, so these are some of the things that I consider when I'm buying and investing in stocks. So guys, I think this was almost an hour of branding and talking about what's happening in the stock market. Hopefully we will be able to connect soon. Make sure you subscribe, you follow me on Streetwise Economics YouTube. As most of you are watching on X. I also have a Facebook account, and my goal really is to just share my experiences, wins and losses. But today was a very interesting day. I didn't expect the US stock market to hold up like this, but you know what? That's what the market is all about. It's there's a lot of surprises, right? That happen in the market. So if you want to make money in the market, from my experiences, make sure you are aware that it's extremely difficult to predict the market. Whatever that you do, whatever that I do, is I like to just have some weighted probabilities to say, I think I think the probability of being right is this, and if I have a probability of being right, then I can take that trade or I can buy. If the probability is lower, then I don't take that trade. Rather than having certainties to say, oh, I think this is going to go up. So I want to be comfortable to say, if my portfolio, the stocks that I hold, drop by 50%, 70%, 80%, will I still be comfortable? I was reading an article about, I think, by Warren Buffett, and he was mentioning, I think it was Jeff Bezos. He mentioned that Amazon stock at some point it dropped by, I think, 90%. 90%. Can you imagine if you had shares for Amazon and it went down by 90%? But still, if you believe that this stock is a strong fundamentals, it is good management, it is it is going through a structural situation that can be resolved, then that's actually time to be excited to be buying more, because what that means is it's cheaper, right? And that's That's the thing. Someone was mentioning that the stock market is the only place that when the price of the stocks drop, a lot of people panic and sell off. But if you go in the shop and you see that the price of something that you want is lower, for me, I would be excited, assuming that the quality still, is not lowered, right? So that's it, guys. Thank you so much for tuning in. Make sure you subscribe, and I will see you guys in the next episode. For now, for some friends in the Middle East, please be safe, stay safe, and sending prayers and best wishes to you all, guys. Take care and bye bye for now.